All right, good afternoon, everybody. This is John. Welcome to the free video. Let's kind of dive in. There's two main markets I want to look at. First, the S&Ps, which had a nice 2.5% rally today. And the question is, is this something, is this the bottom? What do we do with this? And remember, the main thing to keep in mind here, as long as we're in a quantitative tightening position, the path of least resistance is lower, likely until about 3,200. That's kind of when the forward price to earnings matches. Here it was like 21. In this type of environment, that's loose monetary policy, and the rate of change that we've seen in this current tightening, it's more like 15, and that matches up with 3,200. That would change if the rhetoric coming out of the Fed changes. But in the meantime, the idea that we could at least rally back to the mean makes sense. That's about 3,900 on the S&P, so technically that's another 130 some odd points before we see any substantial resistance. Also keep in mind, the last time we had this was a much more sustained down move, right? And we got a lot of kind of false signals. Then we finally rallied. It was a solid 300-point rally. Here we got this is a great buy signal. We got the arrow there, and so another 300-point rally off the lows makes sense. And again, that would take us to about that 21 EMA. So the question then from there is, are we going to see kind of a decline as fast as this one? Well, this is the fastest. This 1, 2, 3, 4, 4.5, 5, 5-bar fall here. This was one of the fastest declines in the S&P's history. Faster than anything we've seen here. I believe it was faster than almost anything we saw the week of March 2020, except for, maybe there's 1 week that was similar. So keep in mind that is not sustainable. So that's something that represents capitulation, and after that, the market has to catch its breath. So long story short, I'd be careful about getting too aggressive on the short side until we at least kind of, get back into that 3,900, 4,000 zone. The other thing to keep in mind, if you look at FXY, which is the yen ETF, and it's kind of hard to see here. Let me put up Forex, which is dollar yen. It's the same thing, it's just inversed. It looks cleaner here. So what's happening here is that the dollar yen is essentially, exploding higher in this chart, which means it's nosediving against the dollar. Japan is on a course of record-breaking quantitative easing. Okay, and when the yen is going up, it's supportive of stocks. And the fact here that the yen was up 1.5% today, that certainly helped stocks a little bit. I mean, it's not a complete. There's definitely a disconnect here because we've certainly seen periods where this is up and stocks are kind of staggering. But the down move here in the yen also corresponded with the big down move we had last week in stocks. So just kind of keep in mind there's a little bit of correlation there. And this war between essentially record quantitative easing in Japan versus literally the fastest tightening fiscal conditions we've seen in U.S. history is essentially those two forces it's like they're punching each other in the face. And we just want to be mindful of it. And part of the reason that the VIX is staying so high right now is the uncertainty around that. So the last thing I want to cover here is the VIX. And for the VIX, the main chart I'm interested in here is, well, we did have a squeeze here that fired long. Of course, that always, the VIX up, market down. But what I wanted you to look at is over here, the RF Pro. The last time we had a sell signal here, the VIX essentially kind of sold off until we got the buy signal here. And the buy signal in the VIX has been, between about 22 and 25. And this was, I think, right around 24.50 or so. We're at 30. So we got a sell signal here. I am looking for the VIX to drift lower, okay, until we get another buy signal. And at that point, that's, the point is like, well, at what point do stocks, roll over and die? That's when they roll over and die. And so this is very much being driven by the VIX levels. And essentially, if we're down here around between 20 and 25, that's the time to short stocks. And when we're up here, that's the time to take profits when you're short stocks. All right. Hope it helps. Have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.